Good morning, students. We will start the session. We have been discussing. Have been discussing basically the alternative investment opportunities we are having in the market. So basically, we are discussing at the moment only the rupee denominated instrument. We have been discussing. Basically, we have started to discuss. We have a base now discussing treasury bill. Treasury bonds also we have touched. Treasury bond we have discussed. Remember the advertisement published by the Central Bank of Sri Lanka. The what are the tenors of treasury bill auctions? The treasury bill and treasury bonds are auction-based method. Uh, treasury bill, of course, weekly auctions you are having. Every Wednesday you are having, but treasury bonds are not like that. Only thing treasury bonds based on the requirement, only government or the central bank publish their announcement. So basically, treasury bill is weekly auction. So the treasury bill we normally told risk-free interest rate. Why risk-free? We assume when we investing in government, there is no risk. So basically, that's the perception, that's the assumption we are having in terms of rupee denominated, right? Now, if you come to dollar denominated instrument with the government, yes, there is risk, right? So that's why your bank, when your bank, when your financial finance company make investments in SLDD, example, which is a locally issued the dollar denominated instrument. That is the only dollar denominated instrument issued locally, right? To raise funds or the basically to get funds from the investors to the government. SLDG, Sri Lanka Development Bank. For example, if you make investment in SLDG, you as an investor, you have to provide or you have to provide the allocation of provision, right? It was 20%. Now for this year, Central Bank of Sri Lanka has reduced to 10%. So you invest in dollar denominated instrument with the government, still you have to make a provision. Still you have to make a provision. Why? The government, the Sri Lankan government can't print dollars, right? So the investing in dollars with the government, there is a risk. Right? So that's why the rating agencies and basically the Institute of Chartered Accounting, and they ask to provide a provision investing in foreign currency, right? 10% of the amount, right? Then there is another one also when you invest in dollar denominated instrument based on the we call it capital charge based on the country downgrade, you have to make another provision in investments you make in dollar terms, right? So when the country is downgraded further, so the amount you have to provide is going up. Now you must have recently seen the statement issued by Moody's. Now Moody's is one of the rating agencies, international rating agencies. Now they have issued a statement this week. A couple of days ago, the Sri Lanka's sovereign rating is under consideration to downgrade. So under consideration, they have not downgraded, but only thing they are considering to downgrade. But the only thing that they are considering only to downgrade. So the rating is reviewing. If you say rating is reviewing, that's fine. So we can't exactly say downgrade or upgrade. But here, specifically saying we are under reviewing or basically we are considering to downgrade. Now, the government has issued a statement, counter statement that so they are not accepting this Moody's statement. If you read the statement issued by the Moody's, they're mentioning the base for their decision. right? Basically, they are highlighting the foreign currency stress the government of Sri Lanka is facing after settling of this 27th July treasury bond. Now we have a ISB, International Sovereign Bond, which is to be settled. It is to be settled on 27th of July this month. Right? This month. So basically everything is ready to pay that. So we don't have any issue to pay this settle this ISB 1 billion with the interest. So the government will honor it. So we have unblemished track record of settling all debts. So we don't have any issue. But only thing we have seen in the statement issued by the government also mentioned that when the ISP settlement is due, generally these rating agencies issue a statement. So that's the pattern they have been watching when the when the ISP is coming due, they're issuing similar type of statement. So when you have this kind of statement, when you see this kind of statement as investor, so basically you think twice before you investing in Sri Lanka. So it basically gives a bad credit, right? Basically gives a bad credit as a country. So the other two agencies have not issued any statement, only the Modi has issued. But if the Modi downgrades Sri Lanka, only thing other two agencies also will follow. That's normally the pattern. Three agencies, if the one rating agency downgrade, meaning other two agencies also will follow the same. So there is a risk of downgrading further Sri Lanka because last year 2020 we have been downgraded as a country, three rating agencies. The difficulties you face as a bank when you take money from the international counterparties was pretty difficult, right? So very difficult after the downgrade. So people are not coming to Sri Lanka, investors are not investing in Sri Lanka, they think twice whether the money will be safe investing in Sri Lanka, all those things coming. So basically we are expecting, so we need more foreign remittances, we need more foreign inflows to the country at this moment for us to get back to our normalcy. So when you issue a statement like this, then it is going to be a disaster. Right? So basically you as an investment banker, the like when you're working in investment bank or when you're working anywhere in the country, financial sector, so you should be alert what's happening. Basically the impact of issuing this kind of we can't actually control the issuing statement by the rating agency, but only what we have to understand is the impact of issuing. How will impact to our day-to-day life, how will impact to our economic fundamentals, how will impact to our countries foreign currency inflows. Will there be any adverse impact? Of course. So we'll have to have a kind of knowledge, kind of a sense that the repercussions of issuing a statement on the country, right, over the country. So basically, it is going to be a disaster thing. Right? So not an easy thing in issuing the negative statement on a country. Going to be a huge thing, right? So you are giving external or the new prospective investors think twice before you go to Sri Lanka. That's the message you are giving by issuing a statement. So the rating agencies are the independent authorities, independent companies. That's why the investors think, right? That's why investors. That's how the investors think that they are independent opinion. So basically, we'll have to act on it. But only the government has issued a counter statement, but we'll see what's the repercussion in coming months. So that statement also gives a negative impact. So it is saying that consideration to go down. So basically, virtually it has been downgraded. So right now we are at the moment under the Moody's CAA1 So basically, if you further downgrade means we will come to CA2, but we are still in the junk bond category level. So very difficult to get along with other countries if you have been further downgraded, right? That is the additional thing. Now we have been discussing all these days treasury bills. Remember that, and we have discussed the we have discussed uh, treasury bills features of this particular instrument, and how this treasury bill auction works. Now this is the advertisement we have discussed with you. I think this is familiar to you, right? It's familiar to. We have discussed all the matters, all the available features here. The only thing, examiner has not tested this so far, right? Examiner has not tested. Only thing I'm requesting, just have a thorough look at the contents of the advertisement. This is an advertisement, right? This is advertisement issued by the government of Sri Lanka to get funds from the public. Issuing office is the Public Department Central Bank on behalf of the government, right? Right. So, and I also I wanted to upload another paper article that these are the primary dealers. Their requirement of capital has been increased by another 1 billion rupees. So basically, presently the requirement is rupees 1 billion, but the government has increased to 2 billion capital requirement of this primary dealers. So I'll be uploading that paper article for your future reference, and the examiner can test you the why the decision came, why the central bank has asked to have more capital for these 10 people, for these 10 primary dealers. Why? Now, what is the need of your what is the need of the capital for your bank? What is the need of the capital for the company, particular company? Why do you issue shares? Why do you raise capital? Why do you finance companies need capital? So capital is basically giving the money to the company. So what are the other methods we have learned to raise capital, raise funds? If you don't issue capital, then you can go to a bank and ask bank borrowing. Same thing will be there. Money comes, but the impact is different. Remember that we discussed, when you're issuing shares, completely different from when you go to the bank and asking a borrowing, right? Two different, both are liabilities. When you issue shares, you have a liability to the owner. Now, for example, if you take your bank, who are the owners? Shareholders are the owners. So, as a bank, when you're working in a bank, you have a responsibility to pay something to the owners, shareholders. How do you pay that? Through dividend. Through dividend only you pay. So when you borrow from a bank, you have a liability to pay to the bank interest plus capital. So that you are accountable. You have a liability. You and the company, two different entities, entity concept, right? Two different entities. So basically, you and the company, you and the entity has two different roles. So you owe something, right? So basically, why they have increased the capital is basically they need to protect the system stability. When you have now see, if you take your bank, now when you're giving loans, now all loans are not paying. There are some loans which are default. That is, you have NPA ratio, non-performing advance ratio, bad loans. So when you give money out of your bank, And when the people are not paying that money back, basically you don't get cash back. And the money goes out. When you have more NPA, meaning you are in crash crisis. You are in crash crisis. Plus, when you make when you think that when a loan is defaulted, when the borrower is not paying that loan, you have to make a provision. Another one. So that impact goes to where? Income statement, P&L, the provision. Money also not coming as regular interval, as installment. Where does this impact come? Balance sheet. So all the financial statements are under stress when you have NPA. Here the provision, here the liquidity. That's the word. Liquidity. You are in liquidity crisis if you have more NPAs. Why? People are taking money from you, but they are not giving back. So when you made more provision, meaning your profitability is shrinking. Your profitability is shrinking, and the regulator has given you to maintain capital adequacy ratio. When you maintain capital adequacy ratio, one part of this particular formula is the the profit. When you have lesser profit, obviously your capital is also coming down, right? So it's very, very disaster thing when you have more NPA, means your capital is under stress. Capital is under stress, so you won't be able to maintain the regulator requirement of the capital. Then what do you have to do? You have to issue shares. You need capital. Can you go and ask the borrowing? No, you can't. Borrowing is a liability separate. But here, the capital you need. Capital you need. Why? You need to maintain the capital adequacy ratio. You need capital. So if you need the capital, of course you have to issue capital. If you are short of liquidity, then fine. Short of liquidity, then you can take a decision whether you issue shares to get money or you go to the bank and get borrowed. That decision you can take it if you are short of liquidity. Here, specifically saying capital. So basically you need to issue capital. So we will be learning later the methods of issuing capital. Capital right issue many things, right? We will be learning later. So basically, yeah. So that's the impact, right? Now the impact is to protect the system stability. When you have more capital, you are safe. Now here these are the people who are primary dealers. Issue what? Their main business is selling government securities. Why? They can go to the now only thing other than the banks, right? The banks have different purposes. Bank is now we take Bank of Ceylon. It's a commercial bank, right? The primary dealership is the integral part of this. Now their main business is taking deposits and giving loans. But if you take equity, their main business is selling the government securities. They are going to participate in the auction. If the auction bids are successful, they are having this government securities, treasury bill and treasury bond. If they don't want to maintain that, they can sell in the secondary market and they can take a profit. That is their task. Now, if you're selling it, but if you don't get money, then finish. You sell, but you don't get money. Same thing will happen. So then, to protect everything, to protect the system stability, they are asking to increase the capital. Right? So similar things. When you have more capital, you are comfortable with the vulnerabilities. Even you make losses, you are comfortable. when you have more capital. So you have a topic called restructuring of companies. There you will be learning the latter part of the syllabus. There will be learning how the loss-making company turn around to a profit-making company. Basically, loss-making company in the sense where do you have the loss? Accumulated losses. So when you have accumulated losses, the amount you put as capital is also eroding. So as an investor, as the shareholder, as the owner of a particular company, you are expecting a profit. You are expecting a profit. But if you are making losses, the amount you put is also eroding. You have a negative net worth. Shareholder capital, share capital, and the equity capital, or the accumulated losses. When you add these things, sometimes some companies we have seen the figure is minus. So the company is worth nothing. Net worth is minus. But if you have the net worth minus companies, you can't just say this company is worthless. There are some items which are not recorded in the financial statement. For example, goodwill. Goodwill we don't record in the balance sheet or P&L or where. But there are companies which have some goodwill or and different basically, and the experience and the human capital that is also not recorded as a financial item. So when you value a company, valuations, the valuers, independent auditors are giving the what you call this valuers are giving kind of weightage to these factors as well. You have another topic under the mergers and acquisition company valuation, but we will not going in depth when we study it. We will be actually discussing the methods of settling this purchase consideration. If you want to purchase a company, you have to pay. That part we will be saying purchase consideration. How do you settle this, and how do you value a company? Examiner has tested frequently the valuing techniques of a company. We'll be learning how do you value a company, only the techniques. The valuation part, of course, done by the accountants. So that is accounting job. We'll be learning the techniques only, right? That is coming under mergers and acquisitions. That we'll be learning. And understand this, the capital has increased. I'll be uploading that the paper article to you for your reference and everything we have discussed. Understand, examiner has not tested this international security identification number. When you're doing a question, I'll be explaining you what does this mean. Now LKA means I have told you treasury bill. If it is treasury bonds, you have what? LKB. Okay, we have LKB. Now right here the 091 means the tenor of the particular. Here 91 days. Here 182 days. Here 364 days. So what does it mean? Basically, ISIN number, ISIN, International Security Identification Number, gives us the maturity period of a particular treasury bill. Now, if you look at this particular ISIN, you can understand, you can see what is the original tenor of this particular treasury bill. What do you mean by original tenor? Original tenor. Now see, take the same example. Now this particular instrument, treasury bill, has been issued 14th July. 14th July. Now 14th must be a Wednesday. So after 2 days, this Friday. 14th was a Wednesday. Yeah, 16th was the settlement day. So 16 if you are successful in having this particular bond, 16 වෙනකොට ඔයාලට මේ bond එක මේ bill එක හම්බ වෙනවා. Bill එක හම්බ. Now what is the date of today? Now if you take from the 16th, you count it from the 16th, 3 months comes. But now today, now say today is 23rd. You have purchased this particular treasury bill from a primary dealer. 16 වෙනිදා primary dealer ට මේක හම්බ වෙනවා. ඔයා ගන්නවා ගිහිල්ලා ඉවරලා Monday ගන්නවා. ගිය Monday කියලා ගන්නවා. 16 කිව්වම Monday කියලා කියන්නේ 19. ඔයා මේ ගිහිල්ලා bill ගන්නවා. ඔයාට කියනවා මට 3 months bill I need to invest, and you go to one of the primary dealers and you take it. Now who is having this? You only having this. Why? You have purchased this from the primary dealer. What is that market we call? Secondary market. Complete. Primary dealers ලා ඉන්නේ ඒගොල්ලන්ට ඕනේ නැත්නම් treasury bill ටික තව කෙනෙකුට විකුණන්න. You have gone and purchased it. Now you are having this. From when you are having this? From the 19th July onwards. From the 19th July onwards, you are having this 3 months treasury bill. Now you need to sell this. Can you sell that? Yes, you can sell it. Anytime you can sell it. Liquid instrument. Is there a market? Yes, there are a market. Are there buyers? Yes. How do you sell this? One thing is you can tell. Basically, if you are an individual investor, generally you again tell the seller where you purchase. Now if you, for example, now you have purchased this particular treasury bill from the equity, then you are going to the equity and say, I need money, please purchase this treasury bill back. ආපහු මගෙන් මේ treasury bill අරගෙන මට සල්ලි දෙන්න කියලා you can make a request. Then generally they do it. Again, they are keeping a profit, and you will be losing sometimes. And you are they can do that. Discounting, calling the word discounting. Later, you will be finding the term, right? So that you can sell that. You want it. Now the equity has purchased back. Now equity is having this. Now I am going to ask අර ගිය පාර මේ තිබ්බ 3 months treasury bill එකක් තිබ්බ ගිය සතියේ ඒක තියනවද ඔයාලඟ? Can I borrow? Can I purchase? Yeah, you can purchase. We have an amount. How much you need? කියලා එයා වුණ මට ඒක sell කරනවා. What's the maturity now? So after 3 months time, it will get matured. After 3 months, counting from when? 16 July onwards. Why 16 is the settlement date? If you see this result sheet. Now see, settlement is 16. For the you will be counting 3 months from the 16 July onwards. Now I am going to purchase. I am the second purchaser. I will be purchasing today only. When was that? When is that? 23rd. So basically, I'll be holding from 23rd July to the maturity date. Maturity date won't change. Have මම මේක ගන්නේ 16 ඉඳන් මේ ගන්න. එක්කෙනෙක් ගත්තේ 16 කාටද මේක හම්බුනේ? primary dealer. දේව පළවෙනි කියලා ගන්න කීයද? 19 සවුන. I am the second purchaser. I am buying this particular instrument on 23rd, which is today. So I am purchasing this particular instrument after 1 week time. So do I hold entire 3 months? No. I am not holding 91 days. I am holding lesser than 91 days. Why? I am purchasing this particular instrument after 7 days only. So 91 minus 7 only I am holding. I'm holding only this particular instrument 84 days. Understood? So anybody can purchase this particular instrument at any time. Get a material on a treasury bill. I can purchase it today if the seller willing to sell. That can be done. Right? So we call it, that's why we call it original maturity is 3 months, 91 days. Original maturity. Right? If somebody wants to sell it after 1 week's time, my maturity is not, when I am holding this particular instrument, my maturity is not 3 months, lesser than that. So we call it a remaining maturity. When you are calculating the pricing of this treasury bill, treasury bonds, treasury bill and treasury bonds, both government securities, you always take remaining maturity, not the original maturity. When you're doing questions, I'll show it to you. When you have a question in the examination, they say 5-year debenture issued on these days. Now after two years time, this investor is going to invest. Now originally they issued for 5 years. කවුරුද මේක ඉන්වෙස්ට් කරලා තියෙන්නේ? දැන් මේක අවුරුදු දෙකක් ගිහිල්ලා. එන අවුරුදු දෙකකට පස්සේ තමයි මෙයා ගිහලා ගන්න. Can they purchase out? Yes. Before it get matured, you can have it. So the remaining maturity period, how much? How many years? Only 3 years. Then after 2 years, only you are purchasing. Remaining maturity is 3 years. So very important when you are doing questions, right? So always you think about not the original maturity, but the remaining maturity. But here, ISIN gives us the original maturity. Original maturity. Make a 3 months treasury bill, make a 1 6 month treasury bill, make a 364 treasury bill, 1 year treasury bill. Right? So now 91 is gone. That we know. LKA is we know. 91 is we know. What is this? Forget about next 2 digits. And what is this J? English letter. What is this here? A, English letter. What is this G? English letter. There's an English letter in between the ISIN. What is that? That's the month. Now ISIN gives us the maturity date. Now see, if the examiner does not give the maturity date, instead of he can give you ISIN number. Maturity, here what? The maturity, the month of the maturity. English letter is the month of the maturity. Month of the maturity. Here the month of the maturity. Here the month of the maturity. Now J means what? Now if you count from A, B, C, D, E, F, G, H, I, J, which month? A means January. B means February. March. April. A, B, C, D, E, F, G, H, I, J. 10. A means January. B means February. C means March. D means April. Like that. So basically A, B, C, D, January, February, March, April, like that, right? So when you count, so A, B, C, D, E, F, G, H, I, J, so that's number 10. So we will see A, B, C, D, E, F, G, H, I, J, right? January, February, March, April, May, June, July, August, September, October. The J is the 10th alphabetical letter. So the 10th month, October. 10th month means October. So the 91 is the 3 months, 21 is the year. right? If you understand the English letter as month, so on your left, that is the year of the maturity. Next to the English letter on your right hand side, that is the date of the maturity. That is how it be shown. J is the month of the maturity. On your left, you have the year, the right hand, you have the date. Now see, when is the maturity? How do you find out? So the 2021, October 15th is the maturity. That is how you decide. From when? From the 16th July 2020. Why? This is the auction date. The 16th is the settlement date. From 16th July 2021, after 3 months, it comes when? 2021, October 15th. Exactly the 91 days. Exactly the 91 days. Understood? July is Masurakan, July, August, September, October 14. Right? October 14 must be a holiday. So that is why they have $91 days counts, right? So this is how you do this. The J is what? The month of maturity. On your left hand side, the year, right hand side, you have the date, the 91 days, right? So basically 3 months comes to 14, so 91 days you have. If you have a holiday on the particular date, then the next working days, right? It depends. Understood? Shall we do this one? LKA means what? Examiner does not give a maturity period. Examiner is not saying whether this is a treasury bill or treasury bond. Can we identify by looking at the ISIN? Yes, of course. This is common, now. This won't change. This won't change. LKA means what? Treasury bill. 182 is what? 6 months. A means what? January. The first letter of the alphabetical order. Alphabet. January. So when is the maturity date then? 22nd. Vedas Visideke, January 14 is the maturity. So forget about the last number, last digit that is denominated by the central bank requirement. Right? We don't know what this is. Only the last digits central bank has put for them to identify whatever the method. Right? Don't worry about the last digit, but other digits, other characters, yes. Here, 6 months comes from 16 July 2021. 6 months comes when? January, the maturity date. If you have purchased this particular instrument on the settlement date, which is 16 July 2021, who can be? Basically private dealers. But can individual? Yes, of course. How? If you have more than 5 million rupees, you can ask one of the primary dealers to put bids on behalf of you. Then you are getting as an individual, you are getting from the 16th onwards. But generally we don't get, we don't put bids through primary dealers. We are going to secondary market and purchase it. So what I want to tell you is that anybody who is purchasing on the 16th, which is the settlement date, they are holding. They are selling it in between, they are holding it until it gets matured. Then is the person who is holding this particular instrument entire maturity, entire 6 months, entire 3 months, entire 1 month, 1 year. Anybody who is purchased in between from that particular purchaser, particular seller. So the new buyer will not be holding entire particular period. So basically he will be holding lesser than the original maturity. Again, 16 වෙනිදා ගත්තොත් ජූලි 16 ගත්තොත් තමයි මට මේ ඉන්ස්ට්‍රුමන්ට් එක ඉදන් මාස 6ක් මම හෝල්ඩ් කරනවා. හැබැයි මම ඊට පස්සේ ගත්තොත් අපි හිතන්න මම මාසයකට පස්සේ දීලා ගන්නවා. ඒතකොට am I holding 6 months? No, I am holding only 5 months. 6 months is what? Original maturity. 5 months is what? My remaining maturity, new buyer's remaining maturity. Understood? We need always the remaining maturity for the pricing. Right? Remaining maturity. Right. So, take this one. LKA means treasury bill, that we know. 364 is what? 1 year. G means what? The month of maturity, maturity month. A, B, C, D, E, F, G. 6th letter. January, February, March, April, May, June, June. So there are July, it's a 1 year. 364. The examiner has not tested. The examiner can give you this ISIN number and he can ask you to find out the different requirements. When is the maturity date? Is this a treasury bill or for 2 marks question possible? Huh? Is this a treasury bill or treasury bond? Is this a maturity? When is the maturity date? So we can ask question, and without giving the maturity date, he can give you this ISIN number for you to find out. Now, same thing comes to the treasury bond as well. Now see, LKB, that we know is the, if you say B, treasury bond. Treasury bill LKT name, right? LKA. Right? Here also the same. Here, if it is a treasury bond, first you go to this particular one, instrument, the month of the maturity. You got it? Month of the maturity. Same thing. Now here, if you take K, A, B, C, D, E, F, G, H, I, J, K, that's 11. Right? A, B, C, D, E, F, G, H, I, J, K. 11 months. So the 11 means what? November. Now see that here they have given the maturity as well. Maturity. Here, without, if the examiner does not give this, but he is giving this one, can you find out the maturity? Of course. This is how you find out. This is how we found out. We have just learned. K was the month of the maturity. On your left hand side, the year of the maturity. If it is a treasury bill, same thing. 23rd, 2023 is the maturity year. On your right hand side, the date of the maturity. Here we go. Here also the same. We need this on maturity. G means what? A, B, C, D, E, F, G. 7th July. Here the 7th maturity date. Right hand side the date. First. On the left hand side the year of the maturity. 28. That is how we do it, right? So basically we have discussed, we had only that part to be discussed, ISIN, and here the definition is also given here, ISIN, somewhere it was there, IS. International Securities Identification Number. ISIN means, right? So now see this one now. If it is a maturity date comes on holiday, immediate next working day. Maturity date එක වැටුනොත් එහෙම holiday එක next working day එකේ තමයි will be making the payment. ඊළඟ දවසේ තමයි අපි ගන්න maturity date, right? That's obvious. And so why I take so much of time for you to understand is this is the base for your next learnings as well, right? This is the base. And examiner has not tested the valuation of treasury bond, treasury bill. Treasury bond, yes. Now, what is this valuation? What do you mean by this valuation? What do you mean by this? Now, I have uploaded a document to you. This one. All these things you can read it, right? Everything is in your notes. Generally, I am discussing in the class, right? Now, this is the formula for the treasury bill pricing. This is the formula for the treasury bill pricing. Nominal value. So, generally, the nominal value of Sri Lanka treasury bill and treasury bond is rupees 100. Rupees 100. So 1 plus R. R means what? Yield. What is the yield? What is the rate you are going to purchase? At what rate? D means what? Number of days. Which days? Original or remaining? Remember very well remember the remaining maturity date. Remaining maturity date. Why we are dividing by 364? Why not 365? This is a treasury bill. So basically we should divide by 364. 364. Not 365. But if it is treasury bond, yes. Actually, if it is a 365 days year, yes, then you should divide by 365. If it is 366 days here, then you should divide by 366. But irrespective of the 365 or 366 treasury bill, you have to take 364. This is the place where students can go wrong, right? Always you take, if it is a treasury bill, 364, not 365. Understand? And this is how you get a question. Now see, if a 3 months treasury bill with a yield of 6%, this is how you. What is the price that you should invest to get the nominal value? Read the next question. If a 6-month treasury bill with a yield of 6.5%, what is the price that if an investor wants to invest 100,000, 10,000? Different method. See the next question. If a 12-month treasury bill with a yield of 10%, what is the price that if an investor wants to invest rupees 100? So generally we take its nominal value as 100. Now, what is the beauty of this particular instrument when you compare to a treasury the FD? What's the difference we have discussed? We have discussed the difference between treasury bill and the treasury FD. Now look at this. Now see this one. Now treasury bills are issued, matured 91, 186. Treasury bills are zero coupon instrument securities, zero coupon, and are sold at a discount to the face value. Now discount to the face value is what? Now all these features available in the treasury bill. Now if you take, now say you have 10,000 rupees with you. You have two options. One is to put in a FD, the other one is to purchase treasury bill. Now say when you purchase a treasury, now say when you go to invest in a FD, you go to the bank or you go to the finance company and give the 10,000 to the bank manager and asking, I need 3 months treasury, I need 3 months FD. Please open 3 months FD for me and give me the receipt. And he gives you the treasury. He takes the 10,000. Bank manager takes the 10,000 or the finance company guy takes 10,000 and 10,000 will be invested in FD. But if you want to go to a purchase treasury bill, you take the 10,000 and you go to the one of the primary dealers and asking, I need to purchase 3 months treasury bill. But he's saying you 3 months treasury bill, this is the rate. Okay, I'm agree. Is he taking 10,000? No. So the primary dealer is not taking 10,000. He takes only the discounted amount. Meaning what? Less than the amount you offer. Example, for the time being, just think. එයා කියන හරි මට දෙන්න ඔයා රුපියල් 9,000. But I'm saying I need to invest 10,000. No, you give me 9,000. I'll give you 10,000 after 3 months' time. That is the mechanism of treasury bill. Discounted instrument. Interest is paid upfront. Discounted. Interest is paid upfront. You invest today 9,000 and after 3 months' time you will be getting another 1,000. Then you'll be completing the 10,000. Today you invest 9,000. After 3 months' time you will be getting 10,000. That is the mechanism of treasury bill. The discounted instrument, zero coupon, no coupon, nothing. Right? But these days there is a particular system, private dealer system, and they take entire 10,000 and they offer it. But generally, it should be discounted instrument. Then generally, they should not accept the entire thing. They are actually, you will be investing only a lesser amount of, then you will be receiving on the maturity the entire amount. That's why we call it a discounted instrument. Understood? Discounted instrument, basically you will be investing a lesser amount now, but on the maturity you will be receiving the entire agreed amount, right? So the basically 9,000 is the amount you are asked to invest. So that amount is found out how? By using what? By using this particular formula. Where this formula, using this formula. So the 9,000 comes how? When you apply all these things, if you have 10,000, how much you should give to this primary dealers? It should be always less than 10,000. How do you find out? By applying all this to this particular formula, finding what? Pricing only. How much do I pay now to get this particular instrument? So generally we go by the 100. Why? CI nominal value is CI ගන්න නම් මම කීයක් දැන් ඉන්වෙස්ට් කරන්න ඕනද? Then you can multiply with that the amount you are intended to invest. Generally we go by the nominal value by the 100 තමයි අපි සාමාන්‍ය 100 එකක් ගන්න නම් 3 months time වලින් 100 එකක් ගන්න නම් 182 days වලින් 100 මට ගන්න නම් 1 years වලින් 1 year time වලින් how much today I should invest? How do you find out? This is the formula. 100ක් ගන්න අවුරුද්දකින් අද මම example 80 නම් මට මේකේ උත්තරය ආවේ 100කට 80 නම් මගේ ළඟ 1 million තියෙනවා නම් I can find out. Simple arithmetic. So the first in the exam you find out the what is the pricing for a particular 100. Why we take 100? 100 is the Sri Lanka's nominal value of the government security. US how much? $1,000. Right? අපි මෙහිදී හොයන්නේ 100 එකකට කොච්චර කියලා. So basically if you find out for the 100 එකට 80 නම් 1 million වලට කීයද? 100 වලට 80 නම් 10,000 දාන්න මම කීයද දෙන්නේ? Right? So understand this formula. Remember that in your exam formulas are not provided. And also when you are doing the project appraisal, you might understand that the discounting value, the present value. Generally, if you have done the chartered or CIMA or other exams, they are providing that as an annexure to the examination paper to this discounted values. But in your exam, examiner is not providing anything. You have to keep in mind. You have to keep in mind the calculation, the methods. How do you calculate? So it's a very cumbersome task for you to calculate this present value when you're doing the project appraisal. I'll be showing you the shortcut method, and then it is important for you to remember, keep in mind. So the examiner is not giving any present value table, right? So it won't be a difficult task if you keep in mind, right? I'll show you the shortcut method to find out they are. And here also the formulas you have to keep in mind. 100 for the nominal value, which is 100 divided by 1 plus R, D divided by 364. D is what? Always the remaining maturity. Always the remaining maturity. What is the remaining maturity? The opposite side? Original maturity. You don't take the original maturity, but in these three questions, the examiner has not given the remaining maturity. Right? Now, if you see this, now see this one. Separate question. So only thing what I want to tell you is if the examiner gives you original maturity, now this is the original maturity 91 days. Now say you are for 3 months treasury bill, now you are going to purchase after 2 months time. Possible. So how many days? Only the 1 month. Only the 1 month you have to. Right? The remaining maturity days is important for us to calculate the pricing. So So don't worry about the calculation. I will be taking this question. Only thing, just understand. We'll finish this. Shall you go to the now understand this particular instrument features, right? If you go through these features, everything I have discussed with you. Only thing, if you can't understand it, please let me know. And what is this instrument, right? Treasury bond is also the same. Shares, of course, I have touched a little. Don't worry about. Just have a look at. When we are doing the shares in depth, we will be taking preference shares. Of course, another method of issuing shares. The originally we issue ordinary shares. The other one is preference shares, right? Public offering that we know you discussing later. This one I want to tell you, LIBOR. Now, where does the LIBOR comes? When you are issuing dollar-denominated instruments, LIBOR comes. But if you see the recent past, SLDB auctions are not issued under variable instrument. Now, if you are issuing variable instrument, then only you have LIBOR. Now, see this advertisement, SLDB, Sri Lanka Development Bonds. This is the dollar-denominated instrument issued by the Central Bank of Sri Lanka to get dollar funds to the government of Sri Lanka. Locally issued. What do you mean by local issued? They are issued only in Sri Lanka. Are there any outside the offshore instrument? Yes. But what that instrument is? ISB, International Sovereign Bonds. And how do you get now understand how does the government get funds, foreign currency funds? One thing is this. The other one is ISB, International Sovereign Bond. International Sovereign Bonds are issued offshore, outside Sri Lanka. Foreigners are allowed to invest. Locals can't. The other one is the borrowing. And the other one is FDI. So all these methods we are getting inflows to Sri Lanka, apart from exports, right? Many methods. Now this is one of the methods. Investors are giving the opportunity to invest. Now same thing. Now this is also same thing. Now see, public debt department issues, Central Bank of Sri Lanka, right? Auction is auction based. Now only the difference is the currency. US dollar size and everything is there. US dollar 100 million they wanted to raise. What are the tenors? Like treasury bill, we have tenors 3 months, 6 months, 1 year. Now here 10 months, 5 years. They only have 1 year and 10 months, 2 year and 10 months, 3 year and 7 months, many types. Now the interest rate, fixed interest rate. Now those days, we had two types of interest rate. One is fixed, the other one is floating. Other one is floating. Floating means what? Variable. Now, when you grant a loan in your bank, you have two types, fixed and floating. Floating is based on what? AWPLR. I'm talking about the rupee lending, right? Your bank rupee lending. Variable rate is based on what? AWPLR. AWPLR plus whatever the margin. But here, if it is a dollar-denominated instrument, dollar lending, or the dollar investment, if it is a variable, you go by the LIBOR rate, London Interbank Offer Rate. London Interbank Offer Rate. Okay. Now remember, also put a note there. Now this LIBOR rate is also vanished after 2020. So there won't be any LIBOR rate. There won't be any LIBOR rate in coming months. Why? The LIBOR will be replaced by so far structured uh, securitized overnight financing rate. So I'll give you a note on that, but it is not much difficult. Now LIBOR rates is no more with you all. We have a SOFA is for the dollars and Sonia is for the GBP. So I'll be giving a note on that when you're doing the foreign currency transaction. Also, sometimes it may need it. Only thing now I want to tell you now, there was a question in your exam which is not they were testing under the proprietary trading, under the foreign currency trading. We will be learning derivative instrument. How do you hedge the foreign exchange risk? Not in depth, but we are just touching it. Now, for example, now what is the most popular derivative methods in Sri Lanka is the forward exchange contract. Foreign exchange risk එක කොහොමද අපි cover කරගන්නේ? What are the instruments? One forward exchange. ඔයා වාහනයක් ගෙන්නනවා නම් you book it today. Now presently it is banned, but ඉස්සර forward exchange contract එකේ තියෙන අද වාහනේ ගෙන්නන මාස තුනකින් එන්නේ. නමුත් you book the amount today. It is banned now, right? Forward exchange, you can't forward exchange contract cannot be entered now due to this present situation. Central Bank has banned it. Now it's for you can forward booking. The moment agree no 3 months in exchange rate. Why? To avoid the risk. When you're importing something, for example, vehicle, you are doing thinking that the rupee will get further depreciated. Now only rupee cost වැඩිවිලා මට බස් වෙයි කියලා you're doing it. Now it's banned, right? So forward exchange contract is the most popular derivative method in Sri Lanka among banks. But there was a question in your exam, a 2-mark question. The examiner was testing derivative product. Now there's another derivative product we call option. There are many derivative products we'll be learning, internal and external. Option is one of another derivative product, and the examiner was tested. Examiner tested the 2 types of derivative products under option, which is out of the syllabus, but we have been discussing that part. Only thing I have not stressed it. But in my foreign currency notes, I have given options. There are 2 types of options. I have given that 2 types of options, but examiner tested that. Only thing, so sometimes we might think that these materials, these contents are not much important, but don't think like that. Study everything. Try to keep in mind everything, because I have summarized everything into one particular PowerPoint presentation. So basically, I'll be discussing all these matters. There are some discussion points are out of your contents of the PowerPoint presentation. So if basically you take a printout and write it down if you think that, right? So basically everything is in your PowerPoint presentation. So that's why in the first lecture I have told you not to go for additional reading. No need. Only you can read it the papers, Financial Times and daily FT papers. That's more than enough for you to pass this exam. So at the moment for your exam, so I'm not recommending you to read any additional book. This is very good. Only thing what we have to concentrate the contents available in the PowerPoint presentation and what I'm teaching to you, and the papers and the past papers. These 3 will enough, more than enough for you to pass this exam, right? So you just keep to the previous students also. Now the 82%, right? So it's a very this mark is anyway gettable under this investment banking. So no worries, you can get it. But only thing, just concentrate what we are doing at the moment. The only thing, you just take the concept So basically, sometimes you must have not heard this. Doesn't matter. Just have a content into your mind. Then later you can have it. Now these things also is available in the market. Now when the government is issuing a SLDB, now there is a SLDB auction on 30th of July. 30th of July. This is the previous one I have taken. Why I want to tell you the result. Now government has announced a new SLDB auction on the 30th of July. You go and see the advertisement available on the website, central bank website. Same advertisement will appear there. So basically these are live. These are live things. We are learning live things. These are not theory. Not theory. Same thing, right? So earlier there was another option called floating rate. So the floating rate is basically LIBOR plus whatever the margin, like you're lending AWPLR plus. Here the LIBOR plus. Why LIBOR comes? Think it is a dollar. Generally, we don't issue any instrument other currencies. Now, how many designated currencies in Sri Lanka? We have 40. Now, what is the recent addition? What currency the central bank allowed recently? Thai baht, right? Thai baht is the recent addition. It is Chinese renminbi, new addition. So now you can accept deposit in Thai baht. You can accept deposit in Chinese renminbi now. Now recent addition, this month, Thai baht. Thai baht has been announced designated currency, right? Now you must have seen now designated currencies if you have. Now you must have seen, now, for example, if you take Kuwait dinar, your bank is issuing Kuwait dinar for the people who need it. And when somebody comes from Kuwait, now they accept Kuwait dinar and give you dollars. Kuwait dinar is an accepted currency, but you can't make payment. The payment method, as a payment method, it is not accepted. Kuwait dinar, dirham, Qatar riyal, like that. You can exchange it into rupees. If you want currencies, if you go Qatar, you can ask bank to give me Qatar riyal. That's possible. If the bank is available with the currency note of Qatar riyal, they can give you. You can take it. හැබැයි අපි ඒකෙන් payment එකක් කරනවා. දැන් Qatar riyal වල මට Qatar වල මොනවා මම ගෙන්නනවා නම් Qatar riyal වලින් payment එකක් කරනවා. You don't do it. That is also there is not an accepted currency. We have accepted currency. Now, like that, similarly, we normally issue the foreign currency instrument in dollar terms only. You go and check your bank balance sheet and ask whether are we lending in euro terms. There are few. Euro waliන් lend කරන ඉන්නවා. Euro waliන් lend කරනවා. Euro වලින් borrow කරන අය තියෙනවා. අනික currency වලින් borrow කරන අය තියෙනවා. Now, generally we do it in dollars. Now, think about this. Now, see, PFC account, personal foreign currency accounts, are only in dollar forms. No. Can't people send money to Sri Lanka through euros? Yes. Can't send money to Sri Lanka in the form of GBP, Great Britain pound? Yes. Does your bank accept Swiss franc? Yes. Does your bank accept New Zealand dollars? Yes. Can I open New Zealand dollar deposit? Yes. Can I open AUD deposit? Yes. But you're not lending it. So what do you do? What do you do with all these foreign currency deposits? Now, your bank must be having USD deposit. Your bank must be having GBP deposit, Euro deposit, AUD deposit. All these things you must be having. What do you do if you don't lend it? Are you keeping in a safe? What? You are paying interest. It's a cost for you. If you don't lend it, if you don't deploy it, what do you do? Generally, you are converting other foreign currencies. Other foreign currencies in the sense other than the dollar into dollars. Then you lend it. Then you deploy it. සමහර බැංකු තියෙනවා පිටරට බැංකු if you have say another GBP deposit, Great Britain pound deposit, body amounts they don't accept. So if they accepting, you can place GBP placement, GBP deposit at a little higher, keeping a little higher margin with the foreign counterparties. මට හම්බෙන සල්ලි GBP deposit එක මට කොහරි invest කරන්න පුළුවන්, කොහරි බැංකුවක place කරන්න පුළුවන් with a margin, but it has to be a considerable amount. Small amounts they are not accepted. So if you have a small amount, what do you do? So generally Sri Lankan banks are doing, when they receive the other currencies other than the dollars, they're converting these other currencies into dollars. So what's the mechanism? How do you convert? Are you selling? Deposit rate, then you're not selling. You're doing what? We call it swap. SWAP. You will be learning under the foreign currency. That is another method of derivative, another instrument of derivative. Swapping. We will swap. We swap it and we convert into dollars, other currencies. Right? We'll be learning later. But the only thing now, that's I told you now, everything we learn here are interconnected. Right? Sometimes all these syllabus contents are interconnected. Right? So basically understand this is additional thing to your knowledge. So if you are not lending in dollars, what's the purpose of getting other currencies? Why do we take it? We convert it into dollars and lend it, or we place it, or we lend it. Whatever, right? So it's important for you to get other currencies as well, right? So earlier we had variable. If it's a variable rate, LIBOR plus. Semi-annual. Minimum amount 10,000. $10,000 you can invest in SLD. Who are the eligible people? Foreign citizens. These are the eligible people. Right? Here the primary dealers in the government security also eligible. Do the primary dealers have dollars? They don't have dollars, but they can raise dollars in this particular purpose only. Right? Different issue, right? These are the people who can be participated at the auction. Right? So tax laws, there is no tax at the moment. There is no tax. Public department selected commercial banks and primary dealers. Designated agents like the primary dealers. There are particular selected commercial banks and commercial banks. These are the people. If you have $10,000 in your bank in the PFC account, you can go and ask one of these banks or primary dealers, I need to invest in SLDP. Can you do that? Yes, of course, you can do that. If you're a primary dealers, you can do that. What's the minimum amount? 10,000. PFC එකේ salary වාඩිගල invest කරන්න පුළුවන් at your own rate. At your own rate. ඔයා හිතනවා නම් මේ 7% return then given over, you can have it. That's up to you. There is no cap limit like treasury bill. Then treasury bill agar na diyan cap limit ekak here. See, you can't go beyond that. But SLDBs you don't have. Dollar denominated instrument you don't have. And so these are the designated agents. Who are the designated agents means what? People who can be accepted. or the banks or the institution can be accepted SLDB application. These are the people who can accept SLDB application. From whom? From these people. Got it? Now, this is also not tested. Since we have an additional stress situation on the dollars, examiner can test by bringing this statement into the paper, right? Understand. Now, initially, how much they wanted to raise? 100. And means 100 වලට වඩා වැඩිපුර දැම්මොත් තව 80ක් විතර ගන්නක් තියෙනවා. That's what it says. In the event of oversubscription. When you're doing the shares, we'll be learning what do you mean by undersubscription, what do you mean by oversubscription. If there is undersubscription, what do you do? Now, I'll also tell you. Now, oversubscription means what? You wanted to raise here the 100. But people are investing, people are putting bids 150, more than the requirement. Now, you check your bank, recent debenture, oversubscribed. I'll show it to you now. Recently concluded HNB debenture was oversubscribed. There was a, if you see the, if you read the papers, there was a paper article, paper advertisement, oversubscribed. And also recently concluded the JAT, Jet Holding initial public offer, oversubscribed. Now see all these things I'm telling you, which are available in the papers. You read papers, you're familiar with this. Jet Holding, IPO. IPO is a part of our syllabus. Oversubscribed. Recently concluded HNB debenture, oversubscribed. There was advertisement. Daily. What do you mean by oversubscribed? More than the amount you require. Can you accept it? You can't. You wanted to raise 100 here. Now they have a liberty here, but they have included here. But if your bank issue a debenture, 100 million, 100 billion, you see, you receive 112. Can you accept more than that? Very difficult. If you are not providing, oversubscribe වුණාම මේකේ ගන්නවා කියලා, if you don't tell the public, then you can't accept. You have to reject it. ඒක ෂුවර් ගාන විතරයි ඔයාලට ගන්න පුළුවන්. So then 100ක් ඕන වෙලාවකට 150 දැම්මොත් කොහොමද මේ 100 බෙදන්නේ 154? බැංක් එකට ඕන වෙනවා 100 බිලියන් රේස් කරන්න. අපි කියමු 5 බිලියන් රේස් කරන්න ඕන වෙනවා යාගේ බැංකුවට. ඩිබෙන්චර් එකක් තුරු. හැබැයි මිනිස්සු දානවා 6 බිලියන්. කොහොමද මේ වැඩිපුර ආපු 1 බිලියන් දාපු අය අයින් කරන්නේ? That is up to you. People who are in the investment banking division. You bring a mechanism. මොකද්ද වෙන්නේ? එහෙම වුණාම හරි. එහෙමනම් ඉස්සලාම අප priority දෙන කාට the individual investors. You can think there are alternative methods. අපි individually ඉල්ලපු හැමෝටම ඉල්ලපු හැම ගානම දෙනවා. අපි ඊට පස්සේ ඉතුරු ටික තමයි අපි බෙදලා දෙන්නේ අනිත් අයට companies වලට. What do you call that? Pro rata basis. This is the word. Pro rata basis. I'll show it to you the advertisement, the prospectus. Pro rata basis. Allocation. Everybody is satisfied. So the basically what happens is the amount I requested, amount I wanted to have will not be receiving either. 5 billion ඉල්ලපු එකනට 6 billion එවලා දිනනවා නම් 6 billion මම සැටිස් කරන්නත් එපා. එතකොට ඉල්ලපු ගාන මට හම්බෙන්නේ නැහැ. lesser amount වලින් I'm getting. අපි ඉන්ඩිවිජුවල් වලට සම්පූර්ණ දෙනවල ඩිසිෂන් එකක් ගත්තොත් ඉන්වෙස්ට්මන්ට් බැංකින් එකේ වැඩ කරන අය that's a different story. නැත්තම් මේ ඔක්කොම සැටිස් කරන්න ඕනේ කියලා ඉවලා හිතුවොත් ඔක්කොමම අපි එන අඩුවෙන් දෙමු. So everybody is satisfied. So many methods. So who can decide? People who are in the investment banking. So it's very important, right? Additional things I'm telling you, right? These are the so we can understand this advertisement. Bits have to be submitted PDF format protected with. Now understand the other factor is SLDB is not a scriptless. Make a defense, but make a the certificate එකයි තමයි දෙන්නේ තාම කොළ certificate එකක් දෙනවා කොළ වලින් හදන. This is not an scriptless. Now treasury bill. Now when you invest in treasury bill, are you getting a certificate? No. When you invest in treasury bond, are you getting a certificate? No. When you invest in debenture, your bank debenture, are you getting a certificate that you have invest kala denawa? No, nothing. When you invest in shares, are you getting a certificate? No, nothing. Everything is scriptless. Scriptless security settlement system. Everything is scriptless. So, I have made investment. Now, say you purchase a shares from the secondary market. Share market, shares. You don't get anything. So, how do you get to know that you have made the investment? You get a broker notice. Broker, a notice, a board notice. Then only you get to know that I have made this investment. My investment is nothing broker. But if you have made the investment in debentures, you don't get anything. Someone is CDS taking even one month and they get a statement. And then only you get to know, okay, I have invested this much. You don't get what I want to tell you is you don't get a certificate. It's certificate you have made investment in debenture, bank ko issue karna, ayatana issue karna, debenture certificate you don't get it. But here SLDB, yes, you are getting it. Why? This is not a scriptless. You don't have system, and here you have to submit your bids physically, paper based. Application fill color you have to give it to them, and you have to hand over the Central Bank of Sri Lanka. Right? Physically you go and hand over. Now this is the advertisement. This is the result sheet. So you can now see the result sheet. Now 10 months they wanted to raise. How much they have received? 30 they have received. Here $1.8 million only. Here 4.72 million only. 0.6 million only they have received. How much they wanted to raise? 100 million. How much they have received? This much. Again, minus dollars done. How much they have accepted? This much they have accepted. What's the rate? Now this was when 30th June. Previously concluded one. 740. 740 we are paying. Who pays? Government is paying. What's the period? 10 months. How much you pay for 1 year FD in rupee terms? 6%. But here dollars, how much paying? See the difference presently you are facing. Indication is you have insufficient of dollars. Whatever the amount you bring in dollars, we will pay you higher. So the rupee interest rates are lesser than the dollar interest rate. That's why I want to show it to you. So the rupee interest rates are lesser than the dollar interest rate. So basically, why we need more dollars? So the government is encouraging to put more dollars. So the only thing you don't get new funds. Outsiders won't invest. But only thing what happens when you are having a SLD now, are you paying 10 months, 1 year FD dollar wallet? Are you paying 740? I don't think so. Now some banks are paying, but so what happens? So anybody who is having PFC account can invest in SLD. So banking line vela mokada karane? Ee sali tika aanduwata yanawa at a higher rate. So the same amount of money available within us only shifting. Counterparty only change. Banking, government. So we are expecting new funds to come. So it won't happen, right? So now see, 10-month treasury bill, 10-month FD, how much we pay? We don't have 10 months. 1 year, 1 year you pay 6%, 6.5% maximum. But here dollars we pay. So what we can understand is the importance of dollars, right? So these are also based auction based. Government has now this particular one. What they wanted to raise 100. Remember the advertisement? 100 million. How much they received? 30, 31, 35, 36, 37, 37. Oh, 37 maximum. $38 million only received. Wanted to raise 100. What do you call this? This is undersubscribed. This is undersubscribed. People have invested lesser amount than the requirement. Undersubscribed. This is the situation called undersubscribed. Right? Now, in issuing shares, now we will now finish, right? This one understood. Now, when you issuing shares, also we can have undersubscribed or oversubscribed. Remember that when you issuing shares or when you issuing debenture, if you think that your debenture is your debenture will be undersubscribed or your IPO will be undersubscribed, then you can appoint a person. You can appoint a person called what? Underwriter. There is a company called underwriter. What does do? What do they do? What does the underwriter do? Anything undersubscribed, they will subscribe. Then when your bank issuing a debenture, say you wanted to raise 2 billion, but people don't have money, then people will invest only, people will put only 1 billion. So the 1 billion is short. With the market ticket, you can't go and say, oh, my debenture is, I wanted to raise 2 billion, but people have invested only 1 billion, which is undersubscribed. So the sentiment you are giving in your bank, not good. People have not placed trust on your bank. Now recently concluded this HNB one, they put oversubscribed. So the people have invested more than the requirement. So the trust on the HNB has been placed by the investor. HNB bank ko hondai. So that's the sentiment. But if you unsubscribe, sugar I'm not getting finish. To avoid this unnecessary bad reputation, you can appoint a person called underwriter. His task is anything undersubscribed shares, anything undersubscribed amount, they will undersubscribe. So who are the underwriters? Generally, merchant banks. Merchant banks are the underwriters. So we will be learning later in short notes. Merchant banks are the underwriters. They are playing the role of underwriter. Right? They have been given the key of that. Right? Underwriter takes their responsibility to the unsubscribed amount of shares, amount of debentures. Right? Basically, that's it. So the underwriter there is a small topic coming under syllabus. That's the underwriter, meaning of the underwriting. So basically, we have completed now issue management, treasury bill, treasury bond. Only thing we have to concentrate on pricing. I have given the 3 scenarios, and I'll be touching. I have not touched the treasury bond pricing yet. I'll be next month, Sunday, taking these questions, and I'll be moving to the treasury bond calculation. Little lengthy lengthy part of that. So then we can move into the shares. Then we can continue with the shares. We can finish off this site issue thing. Is the most important under shares we'll be learning. That's the theory part. Theory in the sense that in the market it's happening, and if you say IPO, it's happening. Now recently concluded Jack holding. Oversubscribed IPO, initial public offering. You list in the CC then. Right? Similar things, so we can learn it. Right? So any question you have before we wind up today's session, then we can meet up on Sunday. So since you don't have no question, we'll be meeting up on Sunday for the calculations and the other part. Thank you very much for joining. Thank you.